Hi everyone, welcome back to Accountant's Desk. In this video, we will understand final accounts, that is trading account, profit and loss account, and balance sheet with the help of examples so you can really understand how they work together. And before we start, if you are a small business owner looking for reliable bookkeeping services, we can help you. Just fill out the Google form on our homepage and we will get back to you soon. So let's get started. What are final accounts? Final accounts are financial statements prepared at the end of accounting year. They help us know the profit or loss made during the period, the financial position of the business. Final accounts are not just mechanical statements, they are the outcome of the whole accounting process. Final accounts transform day-to-day records into useful insights and help us to see how effectively the business traded with the help of trading account, the overall profitability after all indirect expenses and other incomes with the help of profit and loss account, and finally what the business owes and owns at year end with the help of balance sheet. This is why preparing final accounts is one of the most important steps in accounting cycle, both for small businesses and large corporations. Why do we prepare final accounts? To measure gross and net profit or loss, to check the true financial position of the business, to provide clear information for owners, lenders, and other stakeholders. Now, why do we actually prepare final accounts? The obvious answer is to find profit or loss, but there is a deeper reason. Final accounts help business owners evaluate how effectively resources were used, spot trends, and compare with past years. They also reassure lenders, investors, and tax authorities by showing transparent financial results. Most importantly, they provide a factual basis for making key decisions such as should we expand, should we control certain costs, how healthy is our cash position. So, the real value of final accounts is turning scattered data into actionable insights for better business decisions. Structure and flow. First, we prepare trading account, then profit and loss account, and lastly, balance sheet. This is the format of trading account. Trading account for the year ended. So and so. Debit side and credit side. Debit side, particulars amount, and on the credit side, particulars and amount. First, we record opening stock, then purchases, and from purchase, we deduct purchase return and all the direct expenses such as carriage inward, freight, octroi, wages. And on the credit side we record sales, and from sales we deduct sales return and then closing stock. Then we calculate the totals on both the side. If the credit side is more than the debit side, then it is gross profit. We record it as gross profit carried forward. And if the debit side is more than the credit side, we record on the credit side by gross loss. One thing to remember here is we record only direct expenses and direct incomes in trading account. Okay, now let's see the format of profit and loss account. Profit and loss account for the year ended so and so, debit side and credit side. Particulars amount on the debit side, and on the credit side particulars and amount. To gross loss brought forward. If it is loss, remember we took gross profit and gross loss in trading account. The remaining balance will be brought forward to profit and loss account, that is to gross loss brought forward if it is loss, and on the credit side by gross profit brought forward if it is profit. We take the same balances in the profit and loss account. Then on the debit side we record all the indirect expenses such as salaries, insurance, rent, office expenses, depreciation, bad debts, discount allowed, advertisement. And on the credit side we record all the indirect incomes by commission received, by interest received, by discount received, and other incomes. Similarly, we calculate the total for both the sides, debit and credit side. If the credit side is more than the debit side, then it is net profit, and if the debit side is more than the credit side, it is net loss. In the trading account, we record direct expenses, but in profit and loss account, we record indirect expenses and indirect incomes. Now let's see the format of balance sheet. Balance sheet of Mr. ABC as at date, month and year. Liabilities amount, assets and amount. On the liability side, capital, add net profit that we got from profit and loss account. Remember, lastly we got net profit or net loss. If it is net profit, we'll add it, and if it is net loss, we'll deduct it. Less drawings made by the owner. And then sundry creditors, bills payable, bank loan, long-term loan, and then outstanding expenses such as outstanding wages, outstanding rent, outstanding salaries, any outstanding expenses we have to pay, we'll record it here. And on the asset side, we'll record all the fixed assets such as machinery, furniture, fixtures, and from that we will deduct all the depreciation. Example, if we have recorded machinery, less from the machinery we will deduct depreciation of machinery. And if there is one more asset, furniture, from furniture we will deduct depreciation of furniture. Okay, and then closing stock. Remember, in trading account we took on the credit side closing stock. Same closing stock will be recording on balance sheet as well. Then sundry debtors, less provision for bad debts. What all the provisions we kept for the bad debts will deduct it from debtors. Cash in hand, cash at bank, prepaid expenses and accrued incomes. And lastly, when we will calculate the totals, debit side and credit side, that is assets and liabilities, both we should tally. Now let's look at the example. Prepare the trading account, profit and loss account and balance sheet for Mr. Ram as on 31st March based on the following balances. Particulars amount: machinery 27,000, sundry debtors 21,600, drawings 2,700, purchases 58,500, wages 15,000, sundry expenses 600, rent and taxes 1,350, carriage inward 450, bank, that is amount in the bank, 4,500, opening stock 6,000, capital 60,000, bills payable 2,800, sundry creditors 1,400, sales 73,500 and closing stock 22,500. Now let's record one by one. Machinery 27,000. Remember, we record machinery in balance sheet, that is asset side. Let's see how we'll record it. This is the format of balance sheet, that is balance sheet of Mr. Ram as at 31st March 2025. Liabilities amount, assets amount, and we record it as machinery 27,000 on the asset side because machinery is an asset. Next, sundry debtors 21,600. Sundry debtors we record it in balance sheet, that is 21,600. Let's see how we'll record it. Sundry debtors 21,600 asset side. Next, drawings 2,700. Drawings, remember, we recorded in balance sheet, that is liability side. It is drawings of the owner. Let's see how we'll record it. Balance sheet, liability side, less. Remember, from capital we deduct drawings 2,700. Purchases 58,500. Purchases we recorded in trading account. That is, purchase is an expense. 58,500 we recorded on debit side. Let's see how we'll record it. This is the format of trading account. Trading account of Mr. Ram for the year ended 31st March 2025. Debit side and credit side. Particulars amount. And on the debit side we record two purchases 58,500. Remember, we have to record opening stock. So we left the place for that. And next we have recorded two purchases 58,500 on the debit side because it is an expense. Next, wages 15,000. Wages is direct expenses, so we record it on trading account, that is debit side. Let's see how we'll record it. Trading account debit side to wages 15,000 because it is direct expenses, and direct expenses we record in trading account. Next, sundry expenses 600. Sundry expenses is indirect expenses, so we record it in profit and loss account. That is, it is an expense, so it is on the debit side in profit and loss account. Let's see how we'll record it. This is the format of profit and loss account, that is profit and loss account for the year ended 31st March 2025, debit side and credit side, particulars amount, and we record sundry expenses on the debit side because it is indirect expenses 600. Next, rent and taxes 1350. Rent and taxes, it is indirect expenses, and all the indirect expenses we record in profit and loss account, that is on the debit side rent and taxes 1350. Let's see how we'll record it. Profit and loss account debit side rent and taxes 1350 because rent and taxes, it is indirect expenses, and all the indirect expenses we record in profit and loss account. Let's see next. Carriage inward 450. Carriage inward, it is direct expenses, so we record all the direct expenses in trading account on the debit side. So let's see how we'll record it. Trading account, on the debit side we record, that is carriage inward direct income, so on the debit side. Next, bank 4500. Bank, it is cash in bank, that is we record it in balance sheet. Remember, on the asset side we record bank, cash in hand and cash at bank, so we record it in balance sheet 4500. Let's see how we'll record it. Balance sheet, on the asset side we record bank, that is 4500. Cash also we record on the same side, that is assets only. Let's see next one. Opening stock 6000. Opening stock, remember we record it in trading account, that is first entry is opening stock on the debit side, so opening stock 6000. Let's see how we'll record it. Trading account, on the debit side first entry is to opening stock 6000. Capital 60,000. Capital we record it in balance sheet. From the capital we deduct net profit and drawings. Remember? So we record it in balance sheet on the liability side. Let's see how we'll record it. Balance sheet liability side capital 60,000. And from the capital we deduct drawings and we add net profit. And if it is net loss, then we deduct net loss. Next. Bills payable 2800. Bills payable we record it in balance sheet on the liability side. Let's see how we'll record it. Balance sheet liability side 2800. Next, sundry creditors 1400. Sundry creditors we record it in balance sheet on the liability side because we need to pay to the vendors. Let's see how we'll record it. Balance sheet liability side sundry creditors 1400. Next, sales 73,500. Sales we record it in trading account on the credit side because it is income. Trading account credit side by sales 73,500 because it is direct income. Next, closing stock 22,400. Closing stock we record in trading account as well as in balance sheet. Let's see how we'll record it. Trading account credit side by closing stock 22,400. And the next entry is in balance sheet on the asset side. Let's see how we'll record it. Balance sheet on the asset side, closing stock 22,400. Next, we have recorded all the entries. Now let's close the accounts. This is trading account. Let's calculate the total. 73,500 plus 22,400. 95,900. And from 95,900 we deduct debit side 6,000, 58,500, 15,450, and the balance is 15,950 to gross profit carried forward. If we would get gross loss, we would record it on credit side by gross loss. But here we got gross profit, so we record it on debit side to gross profit carried forward 15,950. And this gross profit carried forward, we record it in profit and loss account credit side by gross profit brought forward 15,950. Let's see how we'll record it. This is profit and loss account, and we will record gross profit brought forward on the credit side by gross profit brought forward 15,950. Now let's close the accounts. 15,950 and the balance is 14,000 on the debit side to net profit carried forward, and the net profit we will record it in balance sheet 14,000. Let's see the balance sheet. This is the balance sheet. Let's record the net profit. Liability side, add net profit 14,000. 60,000 plus 14,000 minus 2,700. 71,300. Now let's close the account. 71,300 plus 2,800 plus 1,400. 75,500 on both the sides. Now our balance sheet is tallied, which means all the entries are correctly posted and the accounting equation is satisfied. All the direct incomes and expenses are recorded in trading account, and all the indirect incomes and expenses are recorded in profit and loss account. That net profit has been added to capital in the balance sheet. And finally, assets is equals to liabilities. So our books are balanced. I hope now you have a clear picture of how final accounts help track profit and show your business's financial position. If you found this video helpful, please give it a like, share it with others who might benefit, and subscribe to Accountant's Desk so that you don't miss out the next tutorials. And remember, if you run a small business and want professional bookkeeping support, just fill out the Google form on our homepage. We would be glad to help you. See you in the next video. Thanks for watching.